Good day everyone. Today, we will be presenting our analysis of the case study titled Operational Agility vs Control Deficiency, the case of Tayara Juice in November Hut, prepared for the auditing final verdict under the MIA Accounting Student Conference 2026. As external auditors, our role is to evaluate the company's financial reporting reliability, operational efficiency, and internal control environment. Throughout the presentation, we will identify the key audit risks faced by the company, evaluate its internal control weaknesses, analyze the impact of the absence of a proper costing system, and propose practical recommendations to strengthen its governance and operational sustainability. This case highlights how rapid business growth without corresponding improvement in internal controls and financial management can expose an organization to significant financial and operational risks.
Hello everyone. So for task 1, we will explain the major audit risks arising from the case. Tayara Juice accounting practices can be characterized by significant deficiencies. For 10 years, the company has not maintained complete or consistent accounting records. Financial information is fragmented across spreadsheets, emails, and informal logs, with many transactions lacking proper supporting documentation. The latter part alone is enough of an audit risk for the company. The absence of a comprehensive and general ledger and systematic record keeping raises serious concerns regarding the reliability of financial statements. My next point is unrecorded income, revenue leakage, and incorrect timing. As mentioned in the case study, the company's revenue recognition practices are inconsistent. There are operational risks in which the services are frequently completed before proper documentation and invoicing are performed, and also financial risks. Case in point, the delays in the billing and the absence of reconciliation between completed jobs and recorded revenue expose the company to the risk of unrecorded income and revenue leakage. The next point is overstated expenses and fraudulent transaction risk. The company's reliance on online platforms and informal communication channels also poses risks for material misstatements. The lack of formalization increases the risk for problems such as unauthorized purchases, duplicate orders, and pricing inconsistencies. Also, there is limited verification between items ordered and items received. From an audit perspective, this raises concern over the occurrence and validity of transactions, as expenses may be recorded without proper approval or supporting evidence, potentially leading to overstated expenses or fraudulent transactions. And last but not least, misclassification and incomplete expenses risk. Since the beginning, Tayara Juice's business model lacks a structured costing system for its services and projects. Pricing decisions are primarily based on prevailing market rates, competitive benchmarks, or management experience, rather than a systematic assessment of underlying costs. The company does not formally capture or allocate critical cost components such as technician labor, fuel consumption, logistic expenses, tire usage per job, or overhead costing, including administration and warehousing.
Assalamualaikum and hi everyone. For task 2, we will evaluate the internal control weaknesses and explain the risk and impacts created by these weaknesses. First, the company suffers from a lack of segregation of duties, where staff handle servicing, invoicing, and cash collection simultaneously. This creates opportunities for fraud and cash misappropriation because there is no independent checking process. Second, the company has weak documentation practice. Important supporting documents such as invoices and records are incomplete or missing. As a result, financial reporting becomes unreliable and transactions are difficult to verify during audit procedures. Third, there are no formal procedures or approval system in place. The company does not have proper SOPs, approval hierarchies, or a structured purchase order system. This increases the risk of unauthorized purchases and inconsistent operational practices. In addition, monitoring control are also weak. There is no proper variance analysis, internal audit function, or regular management review. Consequently, errors and losses may remain undetected for a long period. This weak internal control have significant operational impact, including delayed documentation, poor coordination, increasing customer complaints, and inefficient inventory management. From a final perspective, the company faces revenue leakage, inaccurate cost of sale, material misstatement, and unreliable financial statements. Based on Exhibit 2 and Exhibit 3, although the company experienced operational growth, customer complaint increased and budget variance were not investigated, indicating weak governance and poor monitoring control. Moving to the link with audit risk, weak revenue recording may lead to unrecorded revenue. Poor inventory control may result in incorrect inventory valuation, while missing documentation increases the risk of incomplete accounting records. Overall, Taya Laju's weak internal control environment significantly increases the risk of fraud, operational inefficiencies, and unreliable financial reporting. Thank you.
Based on our analysis, the main weakness faced by Taya Laju Sdn Bhd is the absence of a proper costing system. The company determines service pricing mainly based on market rates and management judgment instead of actual cost calculation. As a result, several important cost components such as technician labor, fuel, logistic, warehouse expenses, and overhead costs are not properly captured and allocated. These create low visibility over the company's actual operating costs. The impact can be seen in the company's pricing strategy. Without accurate costing information, the company faces the risk of underpricing and overpricing. Underpricing may lead to hidden operational losses, while overpricing may reduce customer loyalty and competitiveness. In addition, management is unable to accurately identify which services are truly profitable. This weakens decision making and reduces the effectiveness of cost control within the business. Besides affecting operation, the costing deficiency also creates significant financial reporting and governance issue. Since inventory usage, labor costs, and overhead expenses are not properly tracked, the company may record inaccurate cost of sales and unreliable profit figures. This may result in overstated profit, understated expenses, and incorrect inventory evaluation, which increases audit risk and reduces the credibility of the financial statement. Furthermore, the company also demonstrates weak budgetary control. Although annual budgets are prepared, there is no proper variance analysis to compare actual and budgeted performance. For example, in June 2025, operating expenses exceeded the budget by 19,000 ringgit Malaysia, and the company recorded a net loss of 160,000 ringgit Malaysia. However, no corrective action was taken. This reflects weak financial governance and ineffectiveness cost management practices. Overall, despite strong operational growth, weak costing practices may threaten the company's long-term profitability and sustainability.
For Task 4, our group proposed several practical recommendations for Taya Laju based on priority and risk severity. First, the company should implement an integrated accounting and costing system. This system can combine invoicing, inventory, and cost tracking in one platform. It will improve the accuracy of financial records and help management determine actual service costs and pricing decisions. Second, Taya Laju should strengthen revenue recognition and service documentation procedure. Technicians should record completed jobs immediately through the Taya Swift application, followed by automation generation of invoice. Regular reconciliation should also be performed to reduce revenue leakage and improve financial reporting reliability. Third, the company should establish segregation of duties and management review controls. Different employees should handle service delivery, invoicing, cash collection, and approval process to reduce fraud risk and human errors. For medium priority improvements, Taya Laju should strengthen procurement, inventory control, and budgeting processes through approval procedures, stock counts, and variance analysis. Lastly, the company should develop formal SOPs and provide employee training to improve consistency and operational efficiency. In conclusion, Taya Laju should prioritize improvements in accounting systems and internal controls to strengthen financial reporting and support long-term sustainability.
In conclusion, while Tayar Laju Sdn Berhad has demonstrated impressive operational growth and strong market responsiveness, the company continues to face major weaknesses in its costing system, financial reporting practice, and internal control environment. These deficiencies increase the risk of financial misstatement, operational inefficiencies, fraud, and poor decision making. Therefore, it is essential for the company to implement stronger internal controls, establish a structured costing system, improve documentation and financial reporting process, and adopt a more systematic and technology-driven operational framework. By addressing these issues effectively, Tayar Laju can achieve sustainable growth while improving accountability, efficiency, and financial reliability. That's all from our group. Thank you.